we want to talk about Obama's new bank proposals. Of course, we've been talking about how the plan is to rein in the types of risks that banks can take. And of course, this is making waves around the world. We partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Richard Stovin-Bradford joining us now live from London. Richard, glad to have you with us. We see European markets moving lower, financials in particular. It looks like you're going through today what we went through yesterday. What are you hearing?
Absolutely. I've been talking around the banks this morning, and really the markets have fallen quite heavily, and probably as much as 4.4% for one of the banks in early trade. But what we're really hearing is that prop trading, which is trading on your own account, hedge fund activity, and also the private equity activity of banks in Europe is relatively limited, so this sell-off may actually be overdone. Now, the point to bear in mind here is what possible impact could there be on the US operations of these European banks. Probably about 2% of Deutsche's trading profit, something like that, comes from the US, so not really material. Irritating, yes. A blip, yes, but nothing to worry about.
What about how European banks could be affected?
I think European banks tend to be much more involved in corporate lending. They didn't really play so much in this area, and there's general consternation too that there's such vagueness. This seems to be a very politically motivated move by President Obama, and really we haven't seen that same thing here, except the shadow chancellor in the UK, George Osborne, has jumped on the bandwagon, but at the same time we've had banks that are not really involved in this, saying, why is President Obama hitting on these areas which didn't really cause the crisis? It wasn't bank hedge funds that caused the crisis. It was independent hedge funds and brokers. Why isn't he turning on them, they say. The other point is that they rightly, I think, point out that until the whole bonus and remuneration debate has been settled, we're going to get this kind of constant political chiseling on the margin.
So any kind of clue as to what you're hearing for the European banks about, let's just say, if these proposals do pass in the US, how regulation could be affected in the UK?
I think what people are saying is, didn't we begin to agree this with the G20 talks a few weeks back, and didn't we begin to go along the line of saying we will be holding extra capital against these risks, and that we won't be doing this separate, or if you like, sort of unilateral application of regulation. So I think there's general frustration on the lack of clarity. And there's a desire, particularly we've seen from Angela Merkel in Germany, to go with the G20 spirit of negotiations and not do these ad hoc measures like the bonus tax in the UK or now President Obama's actions yesterday.
Richard, we thank you so much. Richard Stovin-Bradford joining us there from London from the FT.